can you set up a brokerage within your self-directed IRA? So let's say if I get, paid back a loan that's a $200,000 loan, and I'm not doing another loan for 6 months, could I invest in some mutual funds in the meantime within my self-directed IRA, or is it just alternative assets?
That's a great question, and that's a question that a lot of people come to me with, um, because like you said, when you cash flow this properly, you end up with a pretty good problem to have, but you end up with a lot of capital that's sitting in the self-directed retirement account that isn't generating any type of return passively because of the self-directed nature and the way that those returns, the way you get those returns is through active investing, right? So
Mm-hmm.
people come to me and they say, hey, I've got all this capital sitting in this retirement account, what can I do with it? And the I typically have two answers for them, because when you're looking at the self-directed structure itself, built in the it's really built to be the opposite of these Wall Street IRAs. And when I say that, I mean the Wall Street IRA, these conventional IRAs are built to be really efficient to invest in these conventional assets, stocks, bonds, mutual funds, with no service or no infrastructure to do any sort of self-directed investing in alternative assets. And on the flip side, you have this self-directed structure, which is really efficient and really great for investing in alternative assets, real estate, crypto, notes, liens, tax deeds, really anything that is allowable by law. But where it does fall short is efficiencies in being able to invest in conventional assets, stocks, bonds, mutual funds. And what a lot of people will do is they'll open some type of entity account. So for the structure, you have an IRA that owns either an LLC or a trust with the checkbook control structures that we set up. And if you can find a brokerage that will allow you to open a brokerage account for your entity, for that IRA owned entity, the IRA LLC or the IRA trust, then you can use that entity to invest in stocks, bonds, mutual funds, and it's essentially a sub account of your IRA. The problem a lot of people will run into is that Fidelity, Schwab, these brokerages will look at this and say, you want us to open an entity for this LLC that is owned by an IRA, but you don't want us to open an IRA for you? No, I don't think we're going to do that. If you want to have an IRA brokerage account with us, you're going to open an IRA with Schwab, and then you're going to invest in these products that we have on the shelves for you. So a lot of those bigger brokerages won't allow you to be able to invest with like an LLC or a trust checking account that's owned by an IRA. But there are a few smaller brokerages that I'm aware of that will allow you to do that. I know Tasty Trades and TradeStation are a couple that come to mind that clients have used. But even then, a lot of people are like, Nick, that sounds great, but I really don't feel comfortable with a Tasty Trades or a Trade Station, this brokerage I've never heard of, and putting my retirement capital in there. And I think that's totally fair. And so that's really where it leads to the other option is this self-directed IRA is really a vehicle to help you diversify. And if you come to this point where you have capital overflowing in this account and you don't have that next deal to continue the snowball effect, then by all means, yeah, let's take those funds that you have and get them back into a conventional IRA. Let's transfer those back over into a Wall Street IRA and let it do what it does best over there. So it's really what you can really do, and what a lot of people opt to do is to have both a conventional IRA, right, and a self-directed IRA, and they'll diversify their assets between the both. And if they have, deals lined up, maybe they'll take some capital from their conventional IRA that's available, move it over into their self-directed IRA, and vice versa. If they don't have deals lined up and they just need that passive income, and that's a good opportunity for you to transfer those funds back into a conventional structure.
Interesting. Okay. I didn't realize you could have both at the same time, a conventional and a
Yeah,
self-directed. Okay. So
yeah.
how long does it take, or what's that process if you wanted to transfer money between them?
Yeah, what you're looking at is really a direct trustee to trustee, IRA to IRA transfer. Um, when you're working through, I mean, it really depends on who you're working with and what their capabilities are. If it's an institution that can send a wire for a transfer, you're looking at that taking maybe a week to get approved and another, week to have those funds actually delivered.
Mm,
But there are some custodians out there who only do transfers by check, and then you're looking at, either waiting on snail mail, can they expedite the check? Generally speaking, though, it, it's a it's a pretty approachable process that, if you planned for, can be really effective.
okay.
And the great thing is too, you're not limited in any way in the amount that you can transfer between accounts. It's not like, you have $100,000 in this IRA and you have to transfer all $100,000 in to the other IRA. If you're making a transfer, it can be a partial transfer, it can be a full transfer. And as long as you're doing that as a direct transfer, a direct trustee to trustee transfer from custodian to custodian, there shouldn't be any limitations onto how often you can do that.
Interesting. Okay. And I mean, transferring it from Solera, your self-directed IRA, to the conventional it would be just a wire, right? I mean, there's like you can initiate that yourself because there's no approval process, right?
What you're looking at for, yeah, I'm glad you brought that up because that's a really important distinction when we're looking at these checkbook controlled funds. So generally with investments, right, when you have this checkbook control structure, you have an IRA that we talked about that owns an LLC or it owns a trust that you manage. You have full control of that entity, right? So when you're looking to invest in a property, you don't turn around to Solera and say, "Hey, Solera, can I pretty please invest in this property? Can you approve this?" There's no process like that for investments. But what the custodian is in place for and the role that they do serve is in keeping these IRA transactions compliant. So when you're transferring funds from an IRA to an IRA, or when you're rolling over funds from a previous employer plan to your IRA, the custodian still does need to be involved to make sure that those are being coded properly, that the
Mm,
proper, filings are being made for those, so that when Uncle Sam's looking at those transactions, he can check those off and smile to himself and be happy to know that that went from one qualified plan to another, right? So the custodian is still there to have your back and help you be compliant with a lot of these IRA transactions. And when I'm saying IRA transactions, I'm talking about contributions to the plan, so personal money that you're contributing to the IRA, distributions, so that's money that you're taking out of your IRA personally to yourself, or any
mm,
rollovers or transfers. And that's money that's typically going from one qualified plan to another. So for any transactions like that, the custodian will be involved. And that's where you actually do want the custodian to be involved and have those processes in place so that you don't have to worry about, oh, I just rolled over these funds to a 401k. I got to file a 1099-R. I got to make sure that this is filed as a rollover and not a distribution for my plan so that Uncle Sam doesn't come after me. So it's those instances where you do want that custodian in place, and the custodians like Solera are there to take care of those processes.
got it. Okay, that makes sense. Okay, and so if we can talk, like we talked about how the self-directed IRA opens up options for you, and you can invest in almost anything. Can you talk about some of the biggest rules when it comes to self-directed IRA funds? Like maybe it's around what you can invest in or what you can invest in, and then also maybe how those transactions, like you just talked about, the contributions and the rollovers, that sort of thing, but then also the investments themselves, how that money has to flow.
hmm Yeah, so when you're looking at the way the IRS outlines, excuse me, when you're looking at the way the IRS approves um, or outlines approved investments for a self-directed IRA, they really don't have like a standard list that you can go to look at, okay, like A, B, C, D, E, F, G, these are all approved investments. They really only have a small list of prohibited investments. So when you're looking at that list, really the only things they prohibit is, first, They won't allow you to invest in any life insurance policies or contracts. That's the first thing that they take completely off the table. Second, they take collectibles off the table. So anything deemed a collectible, they do have a good list of what they consider a collectible: cars, wine collections, stamp collections. Um, they have a really great list again of what those are. Those are completely off the table. Um, and the last thing that they really outline that they say absolutely you cannot invest in this no matter what the circumstance is subchapter S corporations, which typically doesn't affect a lot of investors, but really besides those three prohibited investments, anything else is on the table. Now, that's not to say that there aren't, additional rules and compliance items to consider. But just when you're looking at what can I invest in, the first thing that you want to look at, that first checklist is, am I investing in a life insurance policy or contract? No, we're probably good. Is this a collectible? No, we're probably good. Am I investing directly with a subchapter S corporation? No. And that's really that first checklist you can go through to say, okay, this is an approved, or this is not a prohibited investment for the IRA itself.
Okay, got it. Yeah, that's super helpful. And then I know also when it comes to prohibited investments, a big thing is around self dealing or family members.
Hmm.
So I think a lot of people first hear this and they're like, wow, this is great. I've got so much money in my 401k. I'm going to go self direct it and use it to start investing in real estate deals that I own or fund real estate deals that I owned or a family member owns. What are the specifics around that so that people can understand what they're allowed to do and what they're not allowed to do?
Exactly. Yeah, that's really that next big rule. So you've got your prohibited investments, and then the next thing, just like you mentioned, is those prohibited transactions. First one, you nailed it right on the head. No self-dealing, and that really extends to who are prohibited or disqualified persons to your IRA. So we have prohibited investments, and we also have disqualified persons. These are the people that your plan is not allowed to transact with. It's not allowed to benefit. These people cannot put sweat equity into any of the assets, and we can talk a little bit more about that. But these people are really you as the account holder, your spouse or your partner, and then anybody directly on your that core family line. I think the way that IRS speed the terminology they use is any lineal ascendants and lineal descendants. So when we think about lineal ascendants, it's really just anybody above the family tree from you. So parents and grandparents would be disqualified persons. And when we're looking at lineal descendants, we're really looking at anybody below you on the family tree, which ends up being your children, your children-in-law, your children's children, anything like that. But what a lot of people will mistake, or they'll just hear that it's your direct family and they'll say, oh, so my brother's a disqualified person. That's too bad because he has this property I wanted to go in on with him. And that's really not the case. There's still a lot of people, even in your immediate family, that you may trust and you may work with that aren't disqualified persons that people, I think, just immediately write off because of an assumption, right? So cousins, uncles, aunts, brothers and sisters, these are all people that you may have good working relationships with and have really strong trust with that you can still actually invest with. Now, it's still important that just because you're investing with your brother, this brings up another really important IRA rule, is the express benefit rule. Just because you're investing, let's say, for example, you sell a property to your brother. Your brother is going to purchase that property and he's going to live in it. So far, nothing there is triggering any, prohibited transaction. He's not a disqualified person. Everything looks good there. But let's say you go to your brother and he's saying, look, money's tight. Like, is there any way like you could get us just like a little bit under like the market rate for what we pay for rent? And you're thinking, oh man, he's my brother. Like, I really want to help him out. Sure, I'll give you like $200 below market rate for your rent. And that's where I think a lot of people can get into trouble because sure, he's not a disqualified person, but the decision that you made, did you make that with the express benefit of the IRA in mind, or were you thinking more about the benefit of your brother? even though he's not a disqualified person, you're breaking that express benefit rule, which, just like it sounds like, all decisions, all transactions do need to be made with the express benefit of the IRA in mind. So that's where a lot of people can get tripped up, and it can be tempting, especially with those people you have closer relationships with, to feel like you can cut them a deal or things like that. But that's another big, I would say, top 5 rule for self-directed IRAs that a lot of people overlook.
Interesting. Yeah, I didn't realize that. That if you're not, if you bend the rules on what is the best interest of the IRA, that's a violation as well,
Yeah.
regardless who you're working with. Okay, so then I guess a lot of people would say, well, then how do I buy real estate with my IRA? So what does that look like? What do you have to do if somebody finds a great deal, they've got money in their IRA? How do they invest in real estate without self dealing?
Yeah, so what you're really looking at is making sure that all income and expenses are flowing through the self-directed account. And with the structures that we set up with checkbook control, I can kind of give you an example of what it would look like. So just to kind of reiterate the checkbook controlled structure, right? We have this IRA that is over the top, this umbrella structure that owns an LLC, or a trust. We'll just use LLC for this example. So this IRA owns an LLC. It's the member of this LLC. And you, as the investor, get to be the primary authority on this LLC. So you are the manager. You manage this LLC. And from this LLC, you're going to send money, and that's where Solera comes in, as you know, Kirby, where you have this LLC checking account that you can direct funds out of. You have all the capabilities of a regular checking account. You can send funds via wire, you can write checks, you can send funds via ACH if people allow that, but you have all those same capabilities of sending money. So let's say you identify a property, you're looking to close the deal. It's really as simple as being able to wire those funds or write a check to whoever is brokering that deal. The really important part of purchasing that property is whose name goes on the title, who actually owns this house. And that's where you really want to make sure you're keeping it under that IRA structure. So you're not putting your personal name. This is not an asset that you own personally. This is actually an asset that your LLC owns. This IRA owned LLC is now the owner of this property. So that's really high level what the ownership looks like. And then let's say you purchase this property and you want to start renting this out to tenants. So you get a tenant in the house and they start paying you rent checks. Who does that rent check go to? Who are they paying? They're not paying you personally, right? Because this is not an asset that you own personally. This is an asset that's owned by that LLC structure. So they're actually paying that LLC, right? So really a really simple way to think about it is once you have that LLC, all expenses, so investments that you're purchasing, properties that you're purchasing, they go out through that LLC checking account. All assets are owned by that LLC, and any income from those assets is also going directly back into that LLC checking account. And that's really the first step in remaining compliant and purchasing in a compliant manner is just making sure that you're paying that you're buying it in the proper way with the LLC checking account, and that you're receiving income in the proper way, which is again just right back through that LLC checking account.